He knows that I have no problem telling someone they're wrong. We live in an era of fraud in America, not just in banking, but in government, education, religion, food, even baseball. I thought we were better than this. I really did.
Welcome back to the Big Long here as we wrap up September 21st trading day. So, we did have a rebound today, and like I stated, be careful of the morning rip followed by the sell off after. And that's exactly what happened. So, stocks were led by energy today, and a few things I wanted to point out. A few headlines was FedEx. FedEx actually posted earnings today, and they dropped 7% in their quarterly profit, and actually cut their full year forecast. Um, Pretty much not blaming it on, but the reason is the labor shortage and also the increase on wages with rates and overtimes. So, as they're trying to um, find a solution to the labor shortage, they have to spend more money on third party transportation services. So, that cut into their bottom line numbers. So, on top of that, Macy's comes out today and says that they want to hire 76,000 workers for the holiday shopping season. Now that's, to me, that's kind of crazy, but then again, um who knows what's going to happen in the next, let's say, month and a half. Who knows? Maybe people do jump back into the labor market that quickly, and if Macy's is lucky, maybe they'll get 76,000 employees. So that is something that I found very interesting as another stock that posted earnings, which was a retailer, right? Stitch Fix. Now, Stitch Fix's net revenue increased from year over year of 29%. And then their active clients increased 18%, and that was 643,000 new or active clients. So that is actually very interesting to me, as Macy's wants to hire more workers, but then Stitch Fix, who pretty much is a um, clothing company that packages outfits together that you could purchase. They'll send it to you, you try it on, you like it, you could buy it, right? So the fact that Stitch Fix's earnings is absolutely surprising, just because of their business model and where we're at. That's showing that consumers like that. They want um, that luxury to be flexible and to have things delivered to them. Now, could it be because of COVID? I mean, COVID definitely has shaped the way that we go out and change things, but I did find that very interesting, as the stock did pop once earnings came out and FedEx dropped. So, to me, that's something that I'm paying attention to, as the consumer sentiment seems to be more um, online shopping instead of face to face shopping. So that is something to pay close attention to as we're transitioning to the holiday season. So another one is J&J came out, and they had positive news on their COVID booster shot. So that is positive for them. And then I brought up how Pfizer came out with their news the other day, as in yesterday, on their positive trial runs with their booster shot being effective in children. So, one thing before we get into everything else was what surprises me, which isn't a huge surprise, but Amazon is down today, but um, a company, Hillbiz, which is a micro mobility services company, right? So pretty much what the Lime bikes are and everything. That's what they do. They have a fleet of e-scooters, bicycles, mopeds, and supposedly it's really good. I never saw these anywhere, but they are headquartered in New York. But they announced that they are in talks with an Amazon deal. So that is very interesting, as at one point um, HLBZ was up about 160% on the day. So that is interesting. And I did make a play on it. Wasn't too much because I was skeptical about getting in, and my targets were right. So I got in and got out, and only a couple $100. Nothing too shabby. So as we get into it, we have the sectors, right? Like I said, energy took the cake today in the lead, and industrials fell to the bottom today, as we're starting to see more of a rotation into these consumer discretionary IT and somewhat of healthcare and energy. Now, I do think with healthcare, even though the Delta variant is still a problem, right? And we still have those COVID news coming out with these companies. I do think that that is still a play until COVID is no longer a talking point, and and we drop everything that we were doing throughout COVID and go back to normal. And I mean that in terms of the economy, not printing money, not giving out free money, and not inflating pretty much everything. So, with interest rates still being low, I think technology is the place to be. And until the Fed tapers, interest rates rise, I don't think that should be a problem. But there's a difference between trading and investing, right? So you got to be mindful about that. And as we look into tomorrow, I mean, the markets are probably about to wait on the Fed, on the FOMC statement. So that comes out at 2 o'clock tomorrow. So we'll see probably some volatility in the morning, possibly another gap up, and we inch higher, but then another sell off continues. So that's something to be mindful about and prepare for, as that might not happen. We could just gap up and rebound, right? So now with the options. So notice that Lucid had a call option today, strike price of $28. Uber $43. Lucid a put for 24, as well as some others. But one thing I want to point out is the sentiment in the put to call ratio. Now, the total put to call ratio did drop from this morning, as well as the equity put to call ratio drop, and so did the index. So that means either A, puts were being closed out, or B, more calls were being played, and puts are still in play, obviously, but there was just more calls today. And that's how we saw a rebound and then a quick, drastic sell off, right? So, the most active options today have been Apple. Apple has been very heavy in the options market, which is something that I'm looking at, because if Apple starts to tumble, I think the rest of those big name stocks might follow through. And you could see that the put to call volume is around 0.71, with options volume at 822,000. So that's pretty intense. So time will tell when either A, those options expire, or B, um, shit hits the fan pretty much. That's like as soon as Apple goes down, if it does, I think that that will bring the rest of the market with them as Amazon, right? Amazon's up there too, and that's another big name stock that I'm talking about. I'm not talking about AMC, I'm not talking about the Ubers, I'm not talking about DraftKings. I'm just talking about those big name stocks as in the Amazon, the Microsofts, Google, Apple. So that is something to be mindful on as the options are a volatile game and can push stocks higher when equities are very low. So it's a derivative and it's very volatile. So you just got to be cautious and also got to know what you're looking at when um, you're looking at certain stocks, right? Because the sentiment in the option market could be bearish, and the equity market you might think it's a good time to get in, but then if the option market for that typical equity or index is pretty high volume on the put side, you got to be cautious on where those puts are expiring, because if they're expiring the week that you get in, you might be able to get actually a better buy-in point than that previous date of expired options. So now we get into the futures. Right now, we do have the Dow, S&P, and Nasdaq all down in the moment, as we do see the dollar down just 0.06. Nothing crazy there, but that is good as it's not um, declining fast or accelerating fast. So that's a good sign, because the 10-year did just drop a little bit, and I guess it's unchanged at the moment, but it was previously um, not that high. It was like I think it was 0.03, something like that. So the fact it's unchanged right now, that is good. But if rates start to rise, that could, if you see a rise in the 10-year, that could possibly mean economic optimism. But then if it starts to decline, obviously that could mean less and less optimism. And that could be a scary time, as gold is up 0.81%, silver is down 0.47%. So when you see those type of correlations, just you got to see what is the main trigger around that. And I do believe that it is coming from just the Fed's or the FOMC meeting that will be coming out tomorrow. I think this is what you'll see when stocks pull back. You'll see the dollar decline, and you'll see gold possibly pump up. And that's because of inflation scare. Gold is typically that inflationary hedge. And also when things get scary in the economy, gold also is kind of like a safe haven, as well as the 10-year notes for optimism. So that is something to keep in the back of your mind when these bond auctions come out. So now let's get into the stocks. All right, so here we have the S&P, right? So the S&P broke lower, and what I stated this morning is we're looking at this support line to hold, as we did break through that 50-day moving average, and now you could see that the 5-day is crossing the 20, and also crossed the 50-day, what is signaling some heavy momentum on the downside. Now, the last time that this somewhat happened, which is kind of somewhat identical, is back in May. And the reason why I say that is because it dipped below the 20-day moving average and in between the 50 and the 20-day, but then after um, two, well, after one day really, uh, stocks were bought up, and that was the last of that up until June 21st, right? So now we do have an intense sell-off, as you could see since October 7th. We've had one green day, and that one green day pretty much was false hope. And I did state today, if we're looking at any level, it was to recapture the high yesterday of 4403. And if we recaptured that high, which was also the open, that would have signaled a strong rebound for me. But as I stated previously, the morning rip was followed by a sell-off. So we actually did hit 4394.87. Didn't quite get there, but as you can see, we closed at 434.19. So just being cautious. Depending on what the FOMC meeting brings tomorrow, definitely could trigger a heavy rebound. Now, who knows? Maybe it doesn't, and stocks continue to sell off. And if that's the case, you got to be ready for both scenarios. And if that's the case, I mean, really looking at this level of 42.56 to hold as support. So that is pretty much my not warning call, but that's when I'll really start to get worried, is if we hit this point and we don't bounce back. So that is my price, or not my price, but that is my target that I am looking at, and I will be eyeing that very closely. So let's look at the SPY now. So the SPY tracks S&P, and as you can see, we actually hung right at this price level, and I did mention that this price level would be key to hold. Now, we closed at 433, which is below that line, which I'm not too worried from it, but it does remain in the back of my head to be cautious, because if we don't hold this and bounce back, the next support line that I'm looking at is that 424 number. And right now you could see the SPY is down in after hours by 60 cents. So let's look at the 30-minute chart, because I did warn that the morning would be a rip followed by a sell-off. So as we're looking at this now, 30-minute at 9:30, right? We hit a high of 437. So we did try to reach back up there, but we didn't, and we ended up selling off. So even though we closed what so even though we closed just above yesterday's close, that's still okay in my books. But the big question will be tomorrow. So if this does not hold tomorrow, we will test the previous day's low, which was that 428, right? Yep, which is that 428 number. So that's kind of close to my price that I'm watching down here. So that is something to be very cautious about. So as we move on to the NASDAQ, and we'll start on the 30. So the same thing, we gapped up, testing yesterday's open. And it was kind of up and down today, right? But you see that there is some resistance at yesterday's price. So we did close higher than yesterday, which is a good sign, but I don't want to think that this isn't done yet, because as we zoom out, the sentiment is bullish at this point in time, and as long as we hold this area, I mean, buyers could be coming back in once the FOMC meeting is talked about. So just be cautious as the triple Qs on the daily chart. Triple Qs looking like volume on these red days are kind of high. Today wasn't that much, but you could see that we were down in after hours at this point in time. And we saw that yesterday's low was intact with almost the previous backdated support area. And if this area doesn't hold on the next decline to that area, then we will definitely see a drop off to this next price of 345. So hopefully we don't see that, because if we don't even get to hold here, as in 355, which is kind of the midway point, then that's when I'll really get worried about the triple Qs. So what I want to go into is the stocks that I brought up. So look at this monstrous move by HLBZ. Now I brought this up. This is the one that came out with a partnership in Amazon. So looking at the 30-minute chart, right? This is when the news came out at 8:30 on the dot, and this had no regards in looking backwards, only going forward. So you could see it just went parabolic, and I got in right between 9:30 and 10, and sold right between lunchtime on this candle. I was looking at, I trade on 3-minute and 15-minute multi-frame, so I was able to see this coming, because there's no way a stock could last. At one point it was up like 160%. No stock is going to last the entire day up triple digits. I mean, could it? Yeah, but highly doubt it. So we did end up coming back down to touch the 20-day moving average, closed at $28, which if we zoom in a little bit more, we could see that this might not be coming back up. But could it? Oh yes, but this was a very vicious move that I would look for this to be consolidating at this point in time. I don't think we'll see a $13 move again, but it could happen. I don't know any short data on this, but be mindful that this could make a serious pop. As we look at HCER was another one. So we're looking at the 15-minute. We'll see that came out of the gate hot, and this is in line with pretty much the past couple days. Is that the ATER has come out of the gate hot, and then once it hits that high, it kind of just trickles down and consolidates, and waiting for that next power move upwards. So when I zoom out on the 1-day chart, we see that the sentiment is very bullish here, and nothing is oversold and nothing to be worried about. we have the 5 and the 20 EMA crossing over the 50. So that is a good indication when the 20-day holds as support. As you could also see, the Fibonacci 61.8 held as support there, not once, but 2, 3 times. So when that's holding support like that, that's a good sign as an entry point. And then we have taken off. We hit a high, I think, of $14.06 today. So that's big, as previously on September 13th, we hit a high of $19.10. So right now, I am bullish on this, as the short interest data for ATER is, I believe, somewhere around 30%. It's like 28.99%. And I could only see maybe if this catches, like, you could see the volume here, right? The volume since this big increase from, what was it? It opened at $14.30 and hit a high of $19.10. So this volume was absolutely crazy. And right now, what I'm really worried about, or not worried, but more focused about, is closing this back up. So we closed the gap down here, but now we need to see the momentum push past this resistance area from that heavy profit taking day. So I'm in on this. Full disclosure, I'm only in it for the short squeeze play or gamma squeeze play, but time will tell when it's that. But right now, looking at the daily chart, short squeeze or not, this is still a bullish looking chart at this point in time. So I'm not worried about anything. Do your own education and research on this, and then you make your own decision. So another one that I was looking into is SDC, and I mentioned this today. We're looking at to hold this area right here, and seems like we just can't close above that area. And I believe once we close above this area, that is when the real momentum will kick in, because this short interest data is at 32.88%. So it's even more than ATER. And the same thing goes is I got 5-day crossing over the 20-day back on September 13th, and looking at the 1-day chart, that's a bullish indicator of positive trend. And then we had a slight pullback in between, but then since that pullback, we launched upwards. So we did have a slight pullback in between this white space area between the 50 and the 5-day moving average. So as this 20-day creeps up there, I'm looking for that to cross over as well, to really confirm that this bullish trend will continue. And then if we do close above that $7 range, which I think is key for this squeeze if it happens, because that's the resistance area. Now we filled this gap, but we just can't get over that resistance area. So the next stop would be $9. And I think if we hold that $7 for a day, maybe two, we'll see $9 in a blink of an eye. And then before that, we'll be over $10. Now, it all depends on how much momentum drives this stock. So what I'm looking out for tomorrow before I do anything is, one, what's going on in the future market. Two, the FOMC meeting. That's going to be big, as well as any market movers. So that's why I like pre-market, is because you get to see pre-market movers, and news like HLBZ, that happens. News could come out and people just rush to buy. Buy the news, sell the rumor. So that is the old saying. And now what I would like to do is go over Apple, right? So I made this comment that I think if Apple starts to fall, it's going to bring everything down. And this kind of looks like the same chart as the S&P. And I don't mean that literally, but when it tops out and we've had 1, 2, 3, 4, 5, we've had two green candles, but the S&P only had one. And then we gap down below the 50-day moving average. And then we hung tight right around the support area. I would say support area is somewhere right here. So what I'm looking at tomorrow is to close above yesterday's high. We close above yesterday's high and we recapture that 5-day moving average. I think that is a good sign of Apple rebounding. Now if we dip lower, I see us retesting the 137 levels, possibly all the way back down to sub 120s. And that's if we touch the 200-day moving average. So if we touch the 200-day moving average in Apple and the 50-day crosses over, that's going to be a bearish signal and we don't want that. So I'm really hoping that we don't even come $10 down and close to this range. So hopefully we do hold, like I said, this area of 137 right here before anything. And if we look at the movement today, right? We'll look at the movement from a 30-minute chart frame. So just like everything, right? Today was a bull trap. Futures were up, things were gapping up, but then as soon as market opens, it wasn't really positive. Like I stated, watch for the morning rip and then the sell-off to continue. This whole week is in the hands of the FOMC meeting, as well as the House of Reps voting on the bill to fund the government as to suspend the debt limit. So they're trying to do it, and I'm pretty sure the House actually voted on that today, and it was like 270 to 206 or something like that the votes were to move on with the approval of it and to get it going, because if this doesn't get figured out by September 30th, we could see a government shutdown. We could see us not being able to pay on our debt, and that is going to be bad news. So I'm keeping an eye on Apple because the options heavy plays, and I do think when that starts to go away, we will see Apple fall because the volume on these down days are way higher than the volumes on the green days. So today was just flat because investors are awaiting tomorrow. So that being said, got nothing else, and I hope you learned something. And if you can, hit that like button, and don't forget, go long.